Good morning. Today is Tuesday morning, October 7th, 2025. I'm Joe Terril, president of Terril and Company, private wealth managers headquartered in St. Louis with about $920 million of discretionary assets under management. This is a video update for our clients and also our peers that follow our thoughts and comments. With me today is part of our investment committee, Tricia Warner, Bill Newbold, Dave Carter, and Russ Phillips. And in the few minutes that we have, we will just try and do a quick update on what we think about the economy, what we think about interest rates, inflation, stock market, etc. So with that said, let me see who I'm going to start with here, or who I'm going to force to say something, but the economy seems to continue to be okay. But I guess, Tricia, because you accidentally sat closest, I'm going to start with you. You are not only travel, but you're out doing a lot. Tell us about the economy and what we think's happening.
Well, good morning. First of all, yes, we do think the economy is still very strong. We see it, just in economic activity. We see it in our clients are asking for money, doing, fun things with it. But I think with the environment, the political environment, the things going on in our government, you might be starting to see some cracks.
Is it the fact, is there still, and I kind of open this question to anybody, are the lingering tariffs and companies still not knowing what's going to happen, slowing down purchases and sales while they wait to see what's going to happen on tariffs, or is all that past us now?
I'll take that, Joe.
Okay.
I think Tricia hit on some good points on the economy. To answer your question, I think it's mixed, actually. When we talk to some of our clients, especially on the manufacturing side, we're seeing what I would call slower decisions, slower purchase decisions, right? We have a manufacturer of equipment that tells us, hey, he can rent the equipment, but he can't sell it, right? So I think on the economic side, to Tricia's point, our clients are spending money, whether it's a new car, whether it's a new house, whether it's a remodel, whether it's a vacation. We're getting those requests daily from you all, and we appreciate your business. Thank you. But on the other side, first of all, here in St. Louis, you talk about cracks, right? Washington University let go 300 people. I heard Stiefel let go for the first time in history here. Their headquarters are here, 100 people. So you are starting to see some cracks. I do think that the customer has jobs. They feel good. The stock market goes up every day. And
Seems like it does go up every day.
Yeah. And or maybe I should rephrase that and say, tech stocks go up every day. But the economy seems to be doing well. I think I read an article out of UBS the other day on restaurants, and maybe what's occurring is a shift in the market share wallet of customers, right? They're not spending at restaurants, but they are buying new cars, new houses, bigger ticket purchases. But in regards to tariffs, we are seeing, especially on the manufacturing side, it's been a drag. It's been a drag, but the client and customer continues to spend as long as they have a job and as long as tech stocks hit new highs, in my opinion.
Tricia, what was it you were telling me about a population figure you showed me the other day? I thought that was something to debate and think about.
Yeah, no, the population is expected to shrink for the first time in this coming year. So that's pretty key. You can't grow if an economy if your population is declining. So.
But you need to increase your productivity to offset it, and that's awfully difficult.
It is.
Bill, I'm going to turn to you.
Sure.
As senior portfolio manager on a lot of things about the stocks. We've had good gains. It seems like one day they're wanting to buy the Magnificent Seven and the tech stocks, and then the Dow's down.
Mhm.
The next day it reverses. They want to buy the Dow
Right.
and stay away from the tech stocks. What is this about, and why don't you explain to people what our position is?
Sure.
And what we're doing?
Sure,
and what
thanks,
we
Jim.
think also.
So as Joe mentioned, the market can have volatile rotational flows each day. So the Magnificent Seven and tech stocks are really strong one day, then we see some profit taking and the flow of funds rotates into other stocks. And that's just indicative of how this market is really kind of fragile in that it keeps going up, but it rotates to different groups each way. Or each day, and we feel very strong about where we're positioned. Terril and Company, we finished the third quarter with strong performance. Our year-to-date numbers are going to be strong, and we really feel proud about the fact that we've avoided the most speculative parts of the market. So while we agree that artificial intelligence is going to be a key thing, it really hasn't proven itself yet from a return on investment perspective. So we continue to do well in our names. We had a really nice gains in Warner Brothers, which is now subject of some takeover talks with various entities. And the turnaround at Citigroup on the financial side has paid us for 5 years now. When we first bought that, it got a lot of questions, but now Citigroup is completely turned around. Been buying names like Solventum, which is a spinoff of 3M. You know, again, another debt reduction story and restructuring story that we like. So we feel really good with how we're positioned.
Is Solventum also, would it be fair to say it's a sum of the parts is worth more than the whole story?
Yes. Solventum
We've
recently.
done well over the
Yeah.
years in issues like, well, that's what led us into Warner Brothers. was,
Absolutely.
Coming to the conclusion that by the time you put everything together, it was worth twice what the price with the stock was selling at. You just need an impetus to be able to
Absolutely.
Yeah.
realize it.
And
But
They have sold one business
Yeah.
already and used the proceeds to pay down debt.
So,
And, you know, so we're pleased that took place sooner than we expected, which was nice to see.
mhm.
Dave, I'm going to ask you to talk to people about the fixed income area. Again, our position in fixed income has worked really well this year. We talk about it in our investment committee meetings and reluctant to change, but why don't we, because it is providing us with such good returns, nice income and marginally capital gains in these issues. But what's going on there? Why
Well,
don't you talk about
sure.
it for a few minutes?
And, you know, it's interesting, the Fed did, you know, cut rates and, you know, market it. We expect a couple more cuts this year. You know, we can debate whether that's appropriate or not. But in the face of that, the long end of the interest rate market has not gone down. It you know, sort of has drifted higher, which is interesting. Our portfolio with these reset notes is structured with a shorter duration, and we're collecting, you know, higher, you know, pretty good coupons, you know, 5, 6, even 7% coupons, which are tax advantaged, and in, you know, say 3 to 5 years, we'll have that coupon reset at a nice spread to a benchmark rate. And we like that structure. It provides shorter duration, we have less principal risk, and have good tax advantage income. And you know, then we have a couple of bond sales coming up this week, which will be interesting, you know, how well the market receives those. But also gold continues to drift higher as maybe an indicator of people's concern
Yeah, I
about
think,
sovereign, you know.
around the
debt.
world, people are leery of everybody's currency. The US dollar is a little weaker. Central bankers all over the world continue to get away from buying treasuries. And as you mentioned, I think that's part of the reason why long-term interest rates really have not gone down at all, because of people's concerns about the value of the currency. Japanese interest rates, German interest rates, British interest rates on the long end are all the highest they've been in a number of years.
Mhm.
So I'm going to throw it open for anybody that wants. We continue to be very conservative because we think with prices at all-time record highs and some of the crazy speculation we see going on, that's the proper position to be in. And Bill, as you mentioned, more importantly, we're making really nice returns with our boring little investments. I don't see any event here between now and the end of the year that's likely to change that. Does anybody see anything, watch out for this, or be careful, this liable to change the entire investment markets? I don't
Well,
see
you've got
it.
earnings coming up, we'll see.
Well,
Well,
that's
yeah,
true.
and also employment. The last employment number was a little soggy.
Well, it is, but that's because, right, wrong, or indifferent, the administration is running I'll say, people out of the country. And, you know, some of that is showing up in employment statistics now. Maybe we should try and end it right now. We'll be back in a couple of weeks with another update on our thoughts on the investment world. Brian Curtis, thank you for helping us put this together.